I think that is going to be huge.
How can I get any sort of an edge? What do I need to be doing to get just a little bit of an edge?
Everybody at the table wants you to lose. Crypto punishes people who don't have that mental resilience.
And the psychological war games. They think memes are fair launches. What would you say?
What was happening in the space was going to change everything.
Keep focused and lock in.
Solana was not a hot deal at the time that it was going around.
Will any blockchain flip Ethereum by market cap? What was your biggest learning experience from that?
It's one of the most incredible stories in the history of crypto.
Altseason Incoming, yes or no? GM one and all, and welcome to another interview here on Coin Bureau. And today we are being joined by Haseeb Qureshi. He is the managing partner over at Dragonfly, one of the best known and longest running crypto VC funds out there. He's also Dragonfly's head hype man over on the Chopping Block podcast, one of my personal favorites. So Haseeb, welcome to the Coin Bureau.
Thanks for having me, Nick.
Cool, man. Guys, just before diving in, quick disclaimer, nothing in this interview is financial or investment advice. Please consult your financial advisor as well as our disclaimer in the description. So Haseeb, I'm sure for anyone who's been in crypto for more than a few months, they will have heard about you. But just for our audience, it would be great to get a quick background on yourself and how you got into crypto.
Okay, so before I ever got into crypto, I used to be a professional poker player. When I was 16 years old until I was 21. When I was 19, I was ranked one of the top 10 online no-limit hold'em players in the world. Like many people in the space, I came from the crypto world. I came from the poker world into the crypto world. A lot of parallels between those two ecosystems. Eventually found my way into the software world. I was a software engineer at Airbnb before I decided to come into the crypto space. And my origin story, I'd heard about Bitcoin back in like 2014, 2015, but never really pursued it. Kind of saw it as, okay, this is a way for people to basically send money to buy drugs or settle gambling debts online. It didn't really occur to me as something that was part of a larger movement or something, an important technology that was going to be changing the way that we think about finance. It was really while I was at Airbnb that I started to really understand how disruptive all this stuff was going to become. And that was in the 2016, 2017 era. So around that time was, of course, the advent of Ethereum, the ICO boom. And when I was working at Airbnb, I was working on payments fraud. And I didn't know very much about payments at the time that I came into Airbnb. Airbnb, because it's a travel company, it pays people all over the world, in 50, 60 countries. And when you're managing a payment system that's crossing the world like that, what you learn very quickly is that the international payment system, when you use Airbnb, you have this experience, you swipe a credit card and then magically some money on the other side of the world gets paid. But from the back end, you can see that there's no single magical payment system that can just pay everyone around the world. There's all these disparate payment systems that don't really talk to each other, that were all built like in the 60s and 70s. And all of them are just janky as hell. They don't really talk, they don't really share a common format. They close on weekends, they close on bank holidays, but for different countries. And everything is just so janky and broken. Even for a system like Airbnb, there were CSVs that were getting, emailed every midnight and manually reconciled by hand in order to make sure payments ended up in the right place. And it was just not built for the world that we live in today. The world that we live in today is global, 24/7, interconnected, everything is digital first. But that was not the world of the 60s and 70s, when all this stuff was created. And so as an engineer, you see all that and your intuition is, we should throw this away and we should start over. We should build a new system for the world that we actually live in. And then that was when it clicked for me that, that's what crypto is. Crypto was a bunch of engineers and philosophers and cyberpunks and game theorists who came together and said, if you were to start over and build a new monetary system today, how would you do it differently? Right? Well, maybe you would make it peer-to-peer. Maybe you would make the algorithmic monetary policy instead of discretionary monetary policy, the way that we do with the Fed. Maybe you would have, maybe make it programmable. All these things that we see in all these different cryptocurrencies, different answer to that question of how would you rebuild a financial system if you could start over from scratch. And that's what made me convinced that what was happening in the space was going to change everything. Now, I'm not like a Bitcoin maxi. I'm not somebody who thinks, we're all going to be paying each other in Bitcoin, fiat's going to die. I don't think any of that's true. I don't think there's very many people today who still believe that kind of thing. At the time, that was very common in crypto. In 2017, 2018, people who were big in crypto were like, it's going to destroy the fiat world and governments are going to collapse. And I thought very simply that the future of money is going to be irrevocably changed by the ideas that are being explored in the space. And this is before the Libra. This is before not the new, not the Javier Milei Libra, but like the Facebook
No,
Libra.
yeah.
This is before CBDCs. This is before the rise of stablecoins. At the time, saying that was a pretty weird claim to make, because at the time, crypto was just like this weird speculative mania. It was like very perceived like Beanie Babies or something. But now it's like obvious. It's obvious that, of course, it's already changed the trajectory of the world.
Yeah, I think that's true for so many people who got into the space, is seeing these pain points in the TradFi system, right? I'm curious, then, when you mentioned that, well, you're working at Airbnb, you're saying you were reconciling things through CSV files. Really?
That's right.
This is what 20.
I wasn't reconciling that.
Oh, but in general,
there were human beings reconciling CSVs in order to make sure that payments were properly being reconciled.
Okay. And just going back to your original, background, you're not just, you've been a bit modest. Not just were you a professional poker player, you also wrote a book that was one of the best-selling poker player books. And I'm curious, just because, it is true that many of the original adopters, or earliest adopters of crypto, were from the poker world. And just coming back to this point more specifically, obviously, that's one of the alignments, but then also in terms of generally law investment, big financial gurus on Wall Street and everything, poker is one of the sport games of choice. And I'm curious, has poker helped you in your investment, in the way you approach investments?
It's helped in a lot of ways. I mean, honestly, it's difficult for me to even disentangle all the ways in which poker changed the way I think about things. So for one, poker really teaches you to think probabilistically. So when you're looking at a startup, you might be inclined to think, well, the startup is either going to succeed or it's going to fail. And when you're a poker player, you cannot think that way. You learn through experience. You have to think probabilistically, which is that everything has a probability. There's a chance that your hand may win. There's a chance that it may lose, and you have to really understand the odds. And making a good decision does not mean that you win the hand. It doesn't mean that you end up taking the pot home. All it means is that you got your money in good. If you get your money in good at the right odds, you made the right decision, whether or not you end up making money. That kind of mentality is very important in any kind of probabilistic field. And investing is one of the most probabilistic things you can possibly do. There are times when it really just is uncertain of whether or not a startup's going to win, or whether or not a trend is going to survive, or whether or not this particular category is going to be the winner, or what kind of revenue this company is going to be able to extract in the future. And when you're underwriting those kind of probabilities, unless you can think fluidly in terms of those probabilities, you're not going to be able to make it as a venture investor. The second thing is just emotional regulation. Poker is probably one of the most emotionally and psychologically taxing jobs you can have, because there's so much volatility when you're a poker player. And unlike a lot of other professions, poker is a single player game, right? I mean, it's a multiplayer game, of course, in that you're playing other people, but you are it's not co-op, right? You are the only person at a poker table looking out for you. Everybody else literally wants to take your money. And you don't play poker in teams. There's nobody rooting for you. There's nobody who's on your side. It's just you and your own money every single day. And everybody at the table wants you to lose. So that experience of going through these ups and downs, the volatility, the swings, you have to train yourself to become more and more emotionally robust and resilient. And that kind of experience, I mean, everybody who's in crypto knows it, of just how fucking hard it is to get through the ups and downs of crypto. It's the most challenging, volatile, insane industry I have ever seen. And to actually make it through multiple cycles, you have to build up that emotional resilience. So many
and the
people
psychological
I know,
war games.
absolutely,
And the psychological,
absolutely.
yeah.
So many people I know who came into crypto at the same time that I did in 2017, 2018 period. And they just, they didn't have the resilience. They just didn't make it through. And now they say oh man, I came in the space so early, but I left and I went back to my old job, or I stopped, I sold and I didn't believe it anymore. And it just consistently, crypto punishes people who don't have that mental resilience to be able to make it through the ups and downs. So I think those are probably the two biggest things that I got as a poker player that transplants to crypto.
So speaking about resilience now, this is a great segue, because obviously you're a crypto OG in the space and you've been around for quite a few cycles. So I think it's no secret now that the sentiment in the space right now is quite terrible, to want of a better word. And you guys have talked about it too, obviously, on the chopping block. And I'm curious now, what tips do you have as someone who's been through multiple cycles to keep focused and lock in?
So first and foremost, I would say it's important to make sure that you're not going through that kind of volatility without having a real support system. And so what is that support system for you? So it might be that, you have friend, loved one, somebody with whom you can actually talk and digest some of the stuff that's happening. I think it's also important to keep mindful of what your information diet is. So if all you're reading is basically, the equivalent of doom scrolling. So it's like, okay, prices are down, people are hurting. And all you're doing is reading more and more of like, oh, prices are down, people are hurting, prices are down, people are hurting. It's like, okay, it's not really helping you. It's not really making you, one, get more perspective or make better decisions. You're more just, it's kind of like doom porn. So are you curating your information diet and being thoughtful about what you're actually taking in? If you are just feeding into your own negative emotions, then of course you're going to feel even worse and you're going to feel even more averse and you're going to make even more risk averse decisions. And that's not good for you. And it's not serving your ability to actually be self-regulating. So I think being very considerate of what affects your emotions, what regulates your emotional state. So like what's likely to make you feel more calm, more centered, more able to make good decisions, incorporating rituals into your life. So this is something that, for poker players is essential because, when you're poker, you clock in, you clock out. And there's very defined times when you're playing poker. When you're a trader or you're making investing decisions, very often it's kind of amorphous, right? It's like you're just, okay, well, the markets are going on every single day and I'm like in the market whether I want to be or not. I think it's important to be very mindful about what you do to get yourself in the state that like, okay, I'm now performing. I'm now on. I'm now in the zone. So whether that's, like some kind of meditation or some kind of something you do that's physical that gets you into this mind state and then also clocks you out of the mind state when you're done. And when you're done, like be done. Don't be scrolling Twitter. Don't be like, getting yourself all into like in this kind of just background stress level of doing things when you don't need to be. Having clarity for yourself about how I activate and how I deactivate is, I think, really, really essential to being able to perform at a high level when you're actually making investing decisions.
Got it. So a crypto Twitter detox is what the doctor ordered if you feel in the stress and you find it difficult.
Especially, yeah, if it's habitual for you, absolutely, absolutely.
Well, I mean, yeah, it's one of those habits that just comes, but you got to force yourself away from it because generally, like, sentiment is very fleeting on crypto Twitter as well. It's very fleeting, and it's difficult sometimes when you get thrown around. Okay, so that's a trick. So it's obviously building a ritual and trying to lock in and lock out from that ritual. As it relates now to, obviously, you've been around for quite a few cycles. Many people have as well. And you obviously have experience and networks. And obviously, you run a VC fund. So you obviously got access to networks and everything. So to a degree, you have an edge. Obviously, also your experience in terms of knowledge is an edge. So what would you say to a complete newbie now? He's entering the markets right now and he's looking at it and he's like, how can I get any sort of an edge? I mean, what do I need to be doing to get just a little bit of an edge over the other retail and participants jumping in right now?
How are you going to get an edge? I find it very difficult to answer questions like that in the abstract because the reality is that what your edge is going to be is really particular to you. It's particular to what is your unnatural strength? What is the thing that you are better at or that have more potential in or have more background experience than anybody else does? Very likely that's where your edge is going to come from. It's not going to be, okay, well, I'm going to become like Haseeb, or I'm going to become like, this guy or that guy, or like somebody you're following on Twitter. That person came into the game with very different skill set, very different personality, very different proclivities than you have. So there's no one size fits all formula to success, right? It's all dependent on who are you and what are you bringing to the table before you even got here. The number one thing is to, once you understand what your skill is, right? What is the thing that I have an unfair advantage in? And that thing might be very poorly honed. It might not be, sharpened to the tip that I need it to in order to really actually be effective in this industry. But once you realize like, oh, look, I'm not really this. I'm not really, I'm not really technical. I'm not really a trader. I don't really have this. I don't really have that. You'll eventually find, okay, what is the thing that I actually do have? What is the thing that I actually can potentially bring to the table? Okay, now I've identified that. How do I sharpen it? How do I sharpen it even more until that thing is like a fucking fine, it's like an extremely sharp point, as sharp as you can possibly make it, and find like what is the one smallest place where I can apply this and actually start to use it in what I'm doing. So whether it's trading, whether it's building, whether it's influencing, or whether it's communication or something, networking, whatever it is, that one thing that you can do that's better than anybody else. Like if you really, really build that skill, you will find a way to monetize it and to make it really valuable in this industry. But you can't start from, okay, I want to be like that guy. That guy almost certainly doesn't have your skill set. That guy almost certainly came in at a different time. That guy almost certainly has skills that you don't yet totally grasp that made them get to that place that they got to before you found them. So my view for the most part is that most of really becoming great at something starts with introspection, starts with really understanding yourself, understanding what your own strengths and weaknesses are. Before you can articulate those, you're not going to have a shot at actually becoming successful in crypto or really in any domain. And then discipline, which is, don't get distracted. Don't chase the shiny thing. Don't say like, oh, well, now I see this guy's doing this cool thing over here. Oh, this thing's happening on Hyperliquid, or, oh, people are trading this or they're trading that. Oh, maybe I should do a basis trade. Maybe I should yield farm. Maybe I should blah, blah, blah. If you're constantly chasing the shiny thing, then that just means that you're not giving yourself time to really cultivate a skill set. That's almost guaranteeing failure if you're jumping from thing to thing and you're not really allowing yourself to really settle into one skill set, right? Like the reality is that I have become over the many years I've been doing this, I'm a good venture capitalist. But how did I get that, right? I learned that by not trading, not shipping software, not like, trying to be all these other things that I see around me that people have been successful in. When I first got into crypto, I was like, oh, should I become a trader? Maybe that, I used to be a poker player. It seems like there's a lot of overlap. A lot of poker players became traders. But I decided like, look, I'm going to become a VC. That's it. I'm not going to become anything else. And I'm not going to, trade NFTs. I'm not going to flip meme coins. I'm not going to do any of this other stuff. I'm going to become one of the best in the world at this. And that means saying no to a lot of other things, right? I don't write angel checks. I don't, go around doing a bunch of other cool stuff. I don't like try to become this super crypto socialite because it doesn't matter, because it's not relevant to what I'm doing. So the more that you kind of become myopic, just focused on one thing and just have this tunnel vision around the one thing that you're going to become good at, that is how you actually get these compounding returns to becoming better and better and better and better.
Yeah, very true, very true. Jack of all trades is a master of none, and comparison is the thief of joy. Very true. So obviously, as you say, you're a very good VC and you've done very well in this space. But I want to come to one of your most recent tweets that's done very well. And I think it's also from the perspective of another thing I think that most of us in crypto know is that it's important to learn from mistakes. And this is, you passed on the Solana seed round at 4 cents. And you actually shared your deal notes after that, which is really interesting. And
yeah,
it's obviously got a lot of traction.
Huh?
And yeah. And was that your biggest miss then of all then, the Solana
in
one?
Monetary terms, it was definitely my biggest miss. Yeah.
So I guess then what was your biggest learning experience from that?
So Solana, I actually saw Solana basically every round because I was pitched. And to be clear, I'm not the only one for whom this is true.
Yeah,
I'm the only one who apparently posted this, but almost every VC that was around at the time saw Solana, because Solana, they were kind of going around with their hat out trying to raise money from pretty much everybody. Solana was not a hot deal at the time that it was going around. And obviously Multicoin, it's probably the most legendary investment in the history of crypto, is Multicoin leading the seed round and the Series A of Solana. And I remember at the time having this impression of, okay, these guys are very low level engineers, these Qualcomm dudes who are really focused on GPU optimizations. They're not really talking about consensus protocols. They don't really have a compelling BFT implementation of anything. Their white paper is like kind of weirdly focused on the wrong thing. They're talking all about optimizations. They're not talking about the VM. They're not talking about smart contracts. They're not talking about the account model. They're not talking about consensus. And at the time, almost everybody in crypto was obsessed with consensus protocols. And the whole idea was that Ethereum is going to move to proof of stake. Proof of stake is the future. The really hot deals were things like Tezos was a super hot deal at that time. And now people barely talk. A lot of people don't even know what Tezos is. But Tezos was the hottest deal in all of crypto. And the reason why it was the hottest deal was that it was the first proof of stake blockchain. It was going to front run Ethereum and be the first real big mega proof of stake smart contract chain. And so that was what everyone was looking for. Everyone was looking for, okay, what's going to supersede Tezos? What's going to be the big smart contract chain to rule them all? And the concept was like these Ethereum killers. And so that's what I was looking for. And when I saw this, like, oh, the GPU optimizations, these like low level, hardware guys who are going to come in and try to build a smart contract blockchain, I'm like, there's no way. There's obviously these guys are just, kind of chasing an idea that they don't really understand, that this thing is not BFT. What the hell is proof of history? And it's a lesson that I've learned now many times in crypto, is that, one of the lines in the memo, which many people fixated on, was that in the Solana seed round, they claimed that they were able to achieve 700,000 TPS. Now we have Solana today. You can go see the TPS that Solana does. It's not 700,000. It's not even 70,000, right? It's like, obviously this number was absurd. And I pointed it out in the memo that like, this is an absolutely bullshit claim. that they're doing 700,000, that they can do 700,000 TPS. Like almost nothing can do 700,000 TPS. Even Redis, which is a like non-durable storage database, cannot do 700,000 TPS. So like the idea that you're going to be able to do that in decentralized setting in a public blockchain is obviously bullshit. And so all those things, the funny thing was that a lot of the stuff that I wrote in that memo, I was right, but it didn't matter. And that's one of the lessons you learn as a VC over and over and over again, is that you can be right in your analysis, but it doesn't matter. Like you didn't actually answer the most important question, which is, it's something that I learned over time. The more times that I've made these horrendous investment misses, I've had many more misses beyond just Solana, is that you answered the wrong question. The question is not, okay, is everything that they're saying correct? It's a fucking seed round. Of course, they're not going to know every single thing they're going to build. Technology evolves, plans change, people pivot, they learn more as they're building, right? The real question is, do these people have something that no one else has? Do they have some superpower or some angle of attack that nobody else is going to be able to do? That is the thing that you're supposed to be looking for in a seed round. And Solana was actually one of the very first seeds I ever saw. So I mentioned, I was less than 6 months into the job when I saw the Solana seed round. And, I was just I didn't really know what to look for. I just was kind of, dutifully going off this due diligence kind of technology checklist and trying to say, oh, I'm just trying to analyze, is what they're saying correct? Is this correct? Is this correct? Is this correct? Is this correct? And that's not the job of a venture capitalist. The job of a venture capitalist is not a fact checker. The job of a venture capitalist is to be able to identify who has the potential to be able to totally change an industry. And if the answer is that these people have a 5% chance, a 10% chance, that's in objective terms a very low probability of success. But if they have a 5 or 10% chance to change the fucking industry, then you're supposed to be investing. That's what seed rounds are supposed to be like. And that was the thing that I was missing.
Very interesting. Yeah, I was curious as well then, and not just specifically to crypto, but I've heard a lot of VCs and normal venture capitalists say is that it's a bet on the team, right? Mm-hmm. So how much of that now, in retrospect, when you're looking at seeds and looking at investments, is it how much of the weighting do you weight towards the the team members themselves, their background, what they and how they come across, and their technical ability, that kind of stuff?
Yeah, so it's huge. And again, it's something that you learn through experience, right? You can't really skip that step as an investor, is building that intuition about people and what makes people special, what makes them able to do things that other people aren't able to do. You can see through the history of crypto how many of the layer one blockchain founders, many of whom we backed at that time in lieu of backing Solana, ended up basically giving up. They were building, they launched something in 2017, 2018, didn't gain traction, didn't really go anywhere. And then they just folded. They were just like, didn't work. GG, time to go home, and the Solana guys, much to their credit, they've been grinding now for almost a decade, right? They've just kept going and going and going. And they've had some real valley of darkness moments. When Solana first launched, this is before the big FTX relationship. When Solana first did their TGE, it was very middling. Like there was a long time that Solana was just like less than $1, and it was just hanging out as just like, just somewhere buried on, the bottom of page one. Solana was just a blockchain. It was one of the many layer one blockchains that existed. And there was nothing really special about it, just kind of hanging out there. And a lot of people after that happened to their chains and, they ended up not really making big returns. They just, sold their tokens and they moved on. And Solana, they just kept grinding. They just kept grinding. And every step, after the collapse of FTX, I thought that Solana was going to be left for dead. When Solana went down all the way to $8, my view was that they're not going to be able to recover from this. They went all in on the idea that FTX was going to kingmake them. And FTX ended up themselves getting dethroned. And so after all of that, I was like, okay, well, this is done. Sentiment is going to collapse. FTX was one of the big patron saints of the entire chain. They were the super tenant that was driving everything. So many of the projects on Solana literally had their treasuries in FTX. Like the startups are going to run out of money. Like everything was collapsing. And I thought, this is over. This is totally over. And it's almost entirely to the credit of the Solana team that they were like, no, we're going to keep going. We're going to bring this thing back to life. We're going to resuscitate this thing and give ourselves a chance for the community to turn this around. And they did. It's one of the most incredible stories in the history of crypto, is the ups, downs, and ups again, the Solana ecosystem.
Yeah, that's all credit to the team. I wonder what happened. Speaking about which, I wonder what happened to Tezos.
It's still there. I mean, Tezos, I think now is known for like generative art. So there's a big generative art scene now on Tezos, but it's not, it's not a player in the blockchain L1 space. Exactly.
Yeah, I mean, it was, you bring back some memories because it was the first ever ICO I ever invested in is Tezos. And yeah, needless to say, I haven't checked in on my investment
You don't hold,
for
you're
some
not
time.
holding?
I probably still hold it, but I haven't checked in. It's just,
Got it.
dust
Yeah.
accumulating. So now just moving on, switching gears and coming back to some of the most important topics that have shaped the crypto discussions over the past year. And this is obviously the one that you feel very strongly about, VCs versus memes. Now, you're obviously a VC, and you also have really strong opinions in the fact that you also at ETH Denver called out a lot of the projects that have railed against VCs when, they're backed by VCs themselves. So my question is, for the retail investor who has been conditioned by this idea, oh, we have to dislike the VCs with their high FTV, low float meta that are trying to dump on us, all this kind of stuff, and that they think memes are fair launches, what would you say?
Okay, so for one, you can see from the little bunny quotes that you were giving is that obviously these meme coins are not fair launches. They're not fair at all. And we've all learned that collectively. So like I used to make this argument to people. I don't need to make this argument anymore, right? We all know what happened with Melania, with Trump, and now we all know, of course, what happened with the Libra meme coin, as well as all the stuff that we see the whole supply chain now. We've kind of had like the Cambridge Analytica moment for meme coins in that we see how the sausage is made. We see the whole supply chain. We see that, yeah, all your shit is getting harvested by these guys who like literally it's their job. It's an industry to just go out and basically harvest people who think that they're just kind of in this for this innocent game of trading meme coins. So no, if there's something that's has this much energy, this much money, this much potential for profit, of course it's getting optimized, it's getting extracted. So that's one. And the difference between a VC-backed project and a meme coin is that the VC-backed project, believe it or not, actually discloses to you who owns what, right? A meme coin doesn't disclose shit until ZachXBT shows up and breaks it all down for you. Or there's like some massive scandal and now, the Libra guy is wanted by Interpol. That's what it takes to get clarity on who actually is doing what in the meme coin world. Now, second, if you look at the downturn that's taken place recently, asset prices have come down quite a bit. You look at something like, alts, the average alt is probably down 60, 70%. The average meme coin is down 90, right? So actually, if you look at the GMCI, which is this meme coin index, GMCI is down 90% from the highs, whereas alts are down like, 60, 70. So now that sounds like, well, that's like, what's the difference between being down 90 and being down 60, 70? They're both really shitty. Well, one is literally 3 times better than the other. So if you're down 70%, that's 3 times better than being down 90. There's a big difference between, being down those two different amounts. So the reality is that, yeah, meme coins, they fly high when everything's great. They collapse very suddenly when everything's doing terribly. And so the last thing I would say is that, you might think like, well, these VCs, they're cabals, they just are really in it for themselves and they're trying to destroy this whole thing. But the reality is that almost everything that actually matters in this space was VC backed, right? So like, okay, where are all these meme coins happening? They're happening on Solana, which was VC backed. What are people using to trade all these things? Well, they're using Phantom. Phantom was VC backed. Okay, well, where are all the meme coins actually launching? Where they're trading? Okay, fine. These things, but that was way back in the day. Those are maybe good VCs at that time. Now all the VCs are assholes. They're extractive. They're cabals. Right. So like finally, now we have a true ability to actually trade amongst ourselves and be in this promised land of meme coins. So where are all these meme coin launches happening? They're happening on Pump.Fun. Pump.Fun is VC backed, right? They're incubated by Alliance DAO. There's a bunch of VCs in the cap table. That's where all this stuff came from. All of this stuff was backed by VCs, right? The reality is that now, yes, and now the last cohort, of course, are the Hyperliquid bros. And the Hyperliquid bros, they might say like, oh, well, Hyperliquid shows that there's a true immaculate conception. It's like Bitcoin. There's no need for VCs. There's basically 2 projects in this cycle that are non-VC backed that have been successful. And they are Hyperliquid and Jupiter, right? Now, of course, both these projects, they're both great projects, nothing but respect for Hyperliquid and Jupiter. These both projects, they're self-financed. The founders of these projects are both independently wealthy, and they finance their own projects to the tunes of tens of millions of dollars. Most founders do not have tens of millions of dollars. It is expensive to build shit. It's expensive to build really good products. Where are you going to get that money? How is that going to arrive in your coffers? The answer is that you have to sell equity or tokens in order to finance these projects. Most people don't have that kind of money lying around. And so almost everything else that was self-financed or fair launched has collapsed. Either one, they couldn't make it, they couldn't actually ship the product, or the team just kind of bounced because they had no incentives. So the reality is that VC funding exists for a very good reason. It exists because it's hard to build good things. It requires somebody to understand what you're building very early and take a lot of risk. And it requires specialization. VCs are a natural response to the free market saying, hey, there are ideas that don't have capital. Now, a lot of people say like, okay, well, why not just ICO? Well, first of all, okay, ICOs are illegal. Like obviously they're illegal in many countries around the world, not just in the US. And second is that we still have securities laws. And although, okay, people kind of see that, oh, well, Trump's come in. Now there's this jubilee that you can just do anything and, the laws are all gone and crime is legal. That's not actually true. I know that seems to be the vibe, but it's not literally true. You go talk to any law firm and they'll be like, yeah, you still should not be violating securities laws. Like they will absolutely come after you. So, look, if you're launching a meme coin, okay, meme coins are fine. Obviously, the SEC has given that guidance. But no, if you're selling pre-launch tokens, if something that doesn't yet exist and has no utility, that's a security. The SEC has been very clear, that's security. They've not changed their mind about what are securities and non-securities. And so that means that, no, you can't just ICO a project before it exists. The only way that you can sell that project is by selling to accredited investors in compliance with securities laws. And now, there are a lot of people who try to be, there are things like investment syndicates, like on Echo or on Legion. And those things are great. They're very good alternatives to VCs, but people choose VC investors over a lot of these syndicates, especially in the very beginning. Now, why do they do that? No one coerces them. There's no cabal. There's no conspiracy. There's no one's making them do anything. Why are they choosing to work with VCs over working with, big groups of random retail investors? And the answer is because VCs actually are helpful. We do shit. We roll up our sleeves. This is all we do. We literally have no other job. My only job is to help startups succeed. And if that was your only job, maybe you would also be really great at it. But it's not your only job. You have other stuff you're doing. So it's just pure specialization. It's comparative advantage. That's what happens in a free market. That's why VCs exist. That's why they've existed in every cycle, in every industry, forever. They are a natural response to the need for capital and the need for startups to be able to have assistance and support. That's why we exist. And that's why, I don't think that we're the enemy. Now, obviously, I'm biased, but come at me. If you disagree, give me your best shot.
No, I guess, let me play devil's advocate. You come back to the question around ICOs, and the reason that these are illegal is obviously the rules around accredited investors and exemptions around security offerings for accredited investors. And this rule has been around, I think, since the 80s. Now, obviously, there is a new regulatory regime in Washington, and let's assume that the SEC, adjusts those guidelines such to the point at which projects can go and crowdsource through ICOs today, and offer their tokens pre-launch to retail.
Yeah.
Do you then, if it is legal and becomes legal, do you think that is not a more egalitarian way to offer the same opportunities to retail?
So to be clear, they can under crowdfunding regulations. So there are crowdfunding regulations, right? So you look at something like Kickstarter. You're raising money pre-launch, right? So those things are totally fine. I'm totally supportive of them. I think that they should be expanded, if anything. But the reality is that when retail gets an investing opportunity, almost always that basically creates incentives to try to trick people, to try to fool people. And I've been a professional investor now for coming on 8 years. I understand the space really, really well. I have an incredibly well calibrated bullshit detector, right? I've done my 10,000 hours. I've seen so many pitches, so many teams. I know what it looks like when somebody's full of shit. I can really, just X-ray vision to what they're actually doing extremely quickly. And most retail investors do not have that. And so if you are coming in and you're starting to invest into, basically the equivalent of a Kickstarter where you can just see a bunch of projects and decide what to invest into, overwhelmingly what you see, and this is what you saw in the ICO bubble, is that you basically get this competition where some subset of projects are trying to be as credible and real as possible. And another subset of projects are just trying to raise retail money as effectively and at big scale as possible. And they're actually two very different things. They're two different optimization functions. And the projects that are trying to take retail money as much as possible are basically just absolute dog shit projects, but are very, very good at convincing retail. And no VCs get convinced by them. And so you saw this in the ICO bubble, right? Is that there were a bunch of ICOs that just got a lot of retail investors on board and almost no VCs. So there was stuff like IOTA that was just a darling of retail investors, but no VCs would touch it with a 10-foot pole because they were just this is just complete nonsense. There was stuff I remember like VeChain or just, all this crap that was again, beloved by retail investors, but people who really had industry knowledge and really understood stuff about supply chains or IoT or whatever were just this is nonsense. This is not going to go anywhere. But they sort of do this reputation laundering thing, and they kind of try to get social proof and convince retail investors that, this thing is good, this thing is real, you should invest into it. So I think there is adverse selection. There's a lot of adverse selection that retail investors face. And this is one of the reasons why I actually think syndicates are a good stopgap for that, because syndicates allow, somebody who's more informed, who runs the syndicate, to be able to make the investing decisions and say, hey, this thing looks real, this thing looks legitimate. Here, go ahead and get access through me and through my vetting, as opposed to retail investors themselves trying to be stock pickers. I think that is not it's a very, very bad equilibrium to have that happening when you have totally uninformed investors trying to pick what's real and what's not. I do think, though, that the foundation of a good crowdfunding regime is disclosure. As long as there's sufficient disclosure, I'm on board in principle with having everybody have access to whatever they want. But the reality is that at seed, at the very early stages, you just really cannot effectively engage in a disclosure regime because at seed, you don't know anything. At seed, it's just like, look, we have a team and we have a general idea what we're going to do, and that's it. So it's very difficult to come up with a disclosure regime that actually can cover like the amorphousness of a project at seed. Like at seed, you can just kind of say anything. You can just sort of be like, I'm probably going to build a super high performance EVM, but I don't really know how I'm going to do it. Here's my, this is the team, this is the background, and that's kind of it. As a retail investor, it's very, very difficult to get the right kind of disclosures you would need to actually understand, is this person just going to run away with this money or just like pay themselves a salary, right? Like, can you really even monitor a company to make sure they're not just fucking you if you're a retail investor? The answer is like, not really. It's very difficult to do that. As a professional investor, that's half of what we do, is to just make sure that our rights are being protected and that, when we invest in a founder, they're not just running off with the money and going and spending it on apartments and pizza and getting some compound in the Bahamas. But that's your job as an investor, is to monitor that kind of stuff. And that's why VCs over time start as angel investors, but eventually they professionalize and build out firms.
Carry on with this goal of trying to at least include retail in some way. Obviously, one of the other methods projects have utilized is the airdrop method. And about a week ago, Dragonfly released a report that made the case for legalizing airdrops. So what's the story behind that? And how why do you think it should be legalized, and how should regulators approach these?
Yeah, so the status of airdrops in the US is clearly very uncertain. Now, I think that the attitude from the SEC, the new SEC, has been very clear that the old SEC was making all these growling noises. It wasn't, they never actually went after anybody, but they made very clear from Gensler's statements that airdrops may fall afoul of securities laws, and which is kind of a crazy view, right? Because airdrops, literally, you're not getting paid to get an airdrop. So, there's no investment or profit. How can this be a securities transaction? But that was the intimation that Gensler was making, which made a lot of companies just, in response to that, say, okay, well, we're going to geo-block the US. If you're American, you cannot get an airdrop. Okay, well, now what does that mean? The knock-on consequence of that is that the billions of dollars that were distributed in airdrops over the course of the last couple of years did not go to any Americans. And so that means that not only did we lose out on the gains, so, the total value of airdrops at the times that they were distributed was on the order of like $4 to $5 billion in airdrops on the high end of estimates. And that also means that if you think about, the US tax revenue, like how much of a self-own that was, that basically it's like over $1 billion of tax revenue was lost by the US because of this policy of saying that airdrops are potentially securities. And therefore, you're in violation of securities laws if you're airdropping to Americans. The airdrops went out. They just all went to non-Americans. So non-Americans got more than Americans. And so we pointed out in this report that this was just an absolutely stupid policy. Obviously, it should get reversed and airdrops should be legalized. Now, we're a little bit past a lot of the airdrop meta. So airdrops are ironically waning in popularity now. And now, why are they waning in popularity? A couple of reasons. One, of course, is the way in which airdrop farming has gotten so commoditized and optimized by these airdrop farms that it becomes more and more difficult to actually verify that the people who are mining your airdrop are actually real users. And second, the sentiment around airdrops has really shifted, where more and more people, in the early days when you got an airdrop, the airdrop was it was often a surprise. So people were, if you think about the Uniswap airdrop, which is the first really big airdrop that we had in crypto, it was literally just like, waking up on Christmas morning. It was like, oh my God, presents are here. Like, what the hell? This is insane. We'll sort of never have, I remember what that was like. The day of the Uniswap airdrop, it was just like, it was Christmas morning in crypto. Everybody was just delighted to see that people had gotten, tens of thousands of dollars just suddenly dropped into their wallet for just having been an early adopter of a protocol. Now, airdrops are not like that. Nobody is waking up just being like, "Oh, look, we now have a new airdrop in our wallet. Amazing!"
I was like so annoyed with Santa because Santa, I deserved more than that. Was I bad?
Exactly.
Did I not
exactly.
enough? Did I not Sybil enough? Did I not open enough wallet?
That's right. That's right. Now people are just angry. They're either angry or they're bragging. Right. Those are the two responses you get now to airdrops. And so you can just see that, like, in a way, the mechanism that we started with is kind of broken for a lot of these airdrops, not all of them, but for many of them. And so I sort of predicted that we're going to bifurcate. We're going to go towards two worlds. One world is going to be if you are a protocol that has a very clear North Star metric. So let's say you're a DEX and like the thing that you really care about is liquidity or trading volume. Then, okay, you're going to have points and those points are going to translate to an airdrop and it's going to be extremely clear to everybody what they're getting. So if you do this, if you do X, I give you Y. And you're basically, it's not even really like rewarding your community, quote unquote. It's really more like paying for a service or prepaying for a service before your token exists, right? So the service might be put TVL in my protocol, or it might be, give me trading volume or give me this or give me that. And by having that, I become more competitive as a protocol as I'm going into, the early stages of life. So those, I think, is where you're going to see airdrops and point systems continue to proliferate. But if you go to projects that are more amorphous, right? What is the North Star metric for a layer 1? What is the North Star metric for a layer 2? I don't know. They don't really have one. So it's like, oh, is it TVL? Like, well, you could just put a bunch of TVL in there and then pull it all out. Like, think of it like Blast, right? Blast, okay, they got a bunch of TVL because of the points program, and then the TVL left. And the reality is like, no, the TVL was not the thing that mattered. And so, okay, if that's not the North Star metric, what is the North Star metric? There isn't one. The reality is like it's adoption, it's vibes, it's branding, it's builders, it's high quality protocol, it's traction, it's retention. It's not any one thing. And so if there's not any one North Star KPI, then I predict what you're going to see is that increasingly those projects are going to move away from airdrops and they're going to move more towards crowdfunding, right? Move more towards echo sales, move more towards these kinds of things where you just get people aligned. And what they want is just alignment. They want retail bought in. They want them along for the ride. So you see, for example, what Mega ETH has done with their echo sale and then, these NFT sales that allow people to have skin in the game and really be bought in for the journey and be able to make money with them. And to feel like, hey, I had a wealth creation moment alongside this protocol, and that's why I'm invested in them. That's why I'm pot committed. I want them to succeed. I'm part of the tribe now. That's what they really want. They want members of the tribe. And the way you get members of the tribe is by having your financial fates locked together. And that means not just you get something for free, but you invested. You took your own financial risk in order to be along for the ride. And that I think increasingly is how these projects that don't have these very legible KPIs, that's how they're going to get the community along for the ride.
Skin in the game. That's kinship from the beginning.
Exactly.
Just another one of the airdrops that actually seems to have, most recent ones that seems to have gone well, and you've mentioned it prior, is Hyperliquid. What do you think the secret was in terms of the airdrop? Was it the fact that people really enjoyed using the protocol prior and the airdrop was just seen as a bonus? I mean, because in that sense, people weren't trying to sybil or trying to play the metrics. They were just trading because they enjoyed it. Do you think that that's why it was a successful airdrop? Or
I don't think that's exactly the story. I think it's a few things. So one, obviously there were many people who were sibling Hyperliquid, but it wasn't useful to sibyl. So you didn't get anything more from sibling. All they cared about were your metrics and your overall points, which is a function of the liquidity you were providing as well as the the amount of trading volume that you were doing. So the reality is that some people who were trading on Hyperliquid were farming. Some people who were trading on Hyperliquid were just trading on Hyperliquid, and they were just using that to kind of make it the new venue in which they were doing their own purpose volume. So the product was actually good enough that you would continue trading there because there's enough flow, there's enough retail, there's enough softness in the markets that it's a worthwhile place to trade. Second, it's a really good product. Third, the airdrop was very substantial. So unlike a lot of the other airdrops that were happening around that time, it was very generous in just the overall size of the airdrop. And second, the token was valued very highly. If they did a very large airdrop, but the token was not worth very much, I don't think people would have had the same reaction. But the reality is that all three things happened at the same time. One, a lot of these people decided to retain as users because the product was good enough. Second, the product itself, the token itself was valued very highly. And so the airdrop was worth a lot of money. And third, they airdropped a lot of it. And so if you get all these three things, people are going to have a big wealth creation effect. They're going to get very, very excited about the protocol. And the protocol is actually good enough to retain. There were a lot of airdrops in the past that people felt were very generous, but people churned. They no longer use the actual thing, right? So I remember the Friendtech airdrop was one that people were fairly positive about at the time, and they thought like, oh, we're all going to retain, this is going to be great. Friendtech 2.0, we're all coming back. But the product sucked. And even though the airdrop itself was very generous in percentage terms, right? Like overwhelmingly, I think Friendtech almost entirely, there was no VC allocation at all. Everything was owned by the community, but the product sucked, didn't retain. Everyone left. And as a result, the thing just kind of floundered and died. Hyperliquid, to their credit, was just a great product. And so it was able to retain even post incentives.
So I think we talked about a lot, and I want to just quickly end off on a few predictions. I usually like to, YouTubers like to make crypto predictions.
Sure.
And if you wouldn't mind joining me in some dubious speculation, and I'll fire some of these questions to you, and so just have a go at your answers as well as why. So in terms of more, let's talk about Bitcoin now. So, and I think many people are asking this question is, will we see another Bitcoin cycle top this year?
This year, it's hard to say. I do think that probably Q2 and Q3 are going to remain rough. I think you can just see from this administration that they're not planning to let up. I do suspect that by the end of the year, they're going to pump the brakes. They're going to slow down. They're going to start worrying more about the stock market and worry more about risk assets. Is because I think as we start going towards the midterms, and you can no longer really claim like, oh, we're just, we're doing this ripping off the Band-Aid and changing things really quickly, but then it's going to be back on trend. If you get more than 2 quarters of this pain in the markets, then I think Trump and the Republicans are just going to absolutely get fucked in the midterms. So they have really a limited time window to be able to do this kind of controlled burn that they're trying to do in markets and in the this whole trade policy stuff. So my suspicion is that by Q4 things are going to turn around on risk assets. And now, does that mean that Bitcoin breaks new high by Q4? I don't know. That might not be enough time for there to be enough momentum built. But I would say there almost certainly will be another passing of 100K and another testing of all-time highs, but it may go into early next year. It really just depends on how that timing lays out. But I would guess that by end of this year, we're probably at 100K again. That'd be my guess.
So the 4-year cycle is kind of broken right now. Trump's kind of broken that 4-year cycle. And
yeah. The reality is that, the 4-year cycle has never really been in response to macro, right? It's generally endogenous, right? Basically, up until 2022, we had no connection to macro at all. Crypto was just doing its own thing. And this 4-year cycle was just like our version of the business cycle. Now macro is driving, and a macro driven cycle is very different than an endogenous cycle where it's about crypto sentiment. Crypto sentiment, you're saying like, oh, people are down bad, everyone's sad. But the reality is that so is the stock market. So is like every other asset, commodities are doing the same thing. All correlations have gone to one. The only other time we saw this was in 2022 when the hiking cycle just made it the everything cycle. Everything went through the exact same moves. And so this is now crypto is on the big stage. And that means that we are playing big boy games. These are not like, oh, well, people in Bitcoin are not happy, they're selling. That's not what's happening. What's happening is much bigger than what's happening in crypto.
Crypto is macro, yeah.
Crypto is macro now.
Yeah. Will any blockchain flip Ethereum by market cap in the next 5 years?
5 years.
Or indeed, if you want to take it for a hint.
I don't think so.
You don't think so? You think so?
I do not. Okay. I do not think so.
Okay. You don't think so? Okay, interesting. Do you think they'll be able to overcome a lot of the challenges they're facing right now in terms of, sentiment,
I believe so. I've actually become more sanguine on Ethereum over the last few weeks.
Okay, got it. Speaking of alts, Altseason Incoming, yes or no? Or was it dead?
I think alts are very, very macro driven, right? So if you look at Bitcoin, Bitcoin is basically following NVIDIA. You look at Ethereum is kind of doing its own thing. It's just kind of getting, just sidelined completely. Alts are basically moving alongside, risky tech startups. So if you see tech startups in the NASDAQ start to do well, crypto is going to come back. Alts are going to come back right alongside with them. Okay. So I think it's purely macro.
Purely macro, got it. And then a killer crypto use case that will dominate the next narrative.
I think you're going to see RWAs. RWAs are going to be absolutely massive. And especially now that you see this deregulation and the rise of stablecoin legislation, stablecoins are going to blow up. And once there's more and more people on chain using dollars as a savings mechanism, they're also going to want other safe investment assets. Right now, the reality is the people who are on chain are all, degens. And degens don't care about safe investments. They don't care about the S&P. They don't care about tokenized commodities or whatever. But if you're on chain and all you want is dollars, like you're literally on chain just to have dollars, then okay, you're not here to gamble. You're here to have like a safe investment portfolio. And if once those people are on chain, you couldn't make these products and sell them to anyone because nobody like that was here. But once stablecoins are really proliferating, we're now at 220 billion of total stablecoins on chain. Stablecoins are continuing to grow, despite the fact that crypto is coming down. And that means that, okay, who are those people who are coming on chain and bringing stablecoins? They're not gamblers. They're not degens. They're here because of the stablecoin stability. And so those people are going to be interested in more and more investment assets outside of just dollars. And that's why I think you're going to see RWAs really start to hit this inflection point. And just the fact that they have now an addressable market of consumers who actually care about these products and are going to want them on chain.
RWAs and stablecoin. Well, they're one and the same to a degree, but yes, that
That's
was one
right.
of your predictions for 2025, right? Stablecoins.
Correct.
Yeah.
Correct.
So one or two more predictions, man. Are there any cryptos that are yet to launch? Obviously, we've got like a few that are coming to TGE and coming to mainnet launch soon that will surprise to the upside this year.
Surprise the upside. I think Monad is going to be huge. That's one that, we led their seed round, early investors. But I think the excitement around really being able to scale the EVM, I think that's a huge story. So I think Monad, obviously Mega ETH is another story along those lines of kind of really hard scaling for the EVM. I think EVM is going to make a big comeback.
And then finally, this is a wild card, the real wild card. Yeah. Will Trump launch another meme coin?
I don't think so. I think they learned their lesson from Melania. I think Melania gave their overall net worth such a walloping. They're gonna chill for a little bit and just try to monetize what they have.
Ambitious call, man. That's probably the most speculative one. Well, thanks a lot, Haseeb. I mean, this is a great conversation. There was a lot more we could have covered, but obviously you pressed for time. And it was a really enjoyable conversation. And I really do hope our viewers got as much value as I did. I'll obviously leave a link to your Twitter below so people can follow your thoughts on the daily. Is there anywhere else you want them to follow you? We can leave it in the links below.
If you want to find me, just Google my name and I'm easy to find.
Cool. Well, thanks again for coming on, Haseeb. It's been great. And hopefully get you on as soon again.
Thanks for having me.
Cheers, man.
Cheers.